The status that Hong Kong has is pretty unique, right? You know, goods can transfer through that without any having tariffs. And in addition, there's a fair bit of financial exposure there as well as real estate exposure. I think that you saw that a little bit on Friday, that some of the financial stocks here, but also overseas, were trading in a very mixed, if not negative picture. Because if you do get this, let's say, tension boiling up to friction, to action and escalation, so to speak, really when the US would impose this, sanctions and China reacts, then you're going to get capital flight. And that capital flight, I think, is the biggest risk here at this moment.
Yeah, does it seem like, Ben, to you then in some ways, I mean, we're still dealing with a global pandemic. I'm not sure if you heard, by the way, I mean, I'm speaking tongue in cheek, that when we get through this, and we will, some of those existing problems there between that increasingly fraying U.S.-China relationship, they will still be there for investors to deal with. But the market, Ben, doesn't seem, at least like this morning, that it cares very much.
Indeed, Brian, it doesn't care too much right now because, as you say, there's a pandemic where a solution is really coming, let's say, in the near term. Right? That just there's one other company again with clinical trials on the next vaccine. So the market is very much about the hopes that the crisis, the pandemic, is going to ease faster, and therefore the reopening becomes a, let's say, robust recovery. But this risk in Hong Kong has been there lingering, and it's just back to the surface. So I think if you are currently investing in the markets, you want to keep this really in mind, particularly because of the tension between the US and China leading to new trade frictions and therefore economic impact.
You know, and the reason that Hong Kong is so vital to the West, and I think you cannot overstate this point, and tell me if I am wrong, is that, number one, it's the keyhole to Western financial markets. It is the place where people in Asia, investors, venture capitalists who want Western dollars, they have to usually go through Hong Kong. They're not doing it in Shenzhen. They're not doing it in Guangzhou, some of the manufacturing tech hubs. They use the Western banking connections in Hong Kong. Those are at risk. And this is also a real estate-based economy, one that is on many levels the most expensive in the entire world.
Exactly. I think that is where the key risk is. The capital flight that we may be facing could particularly hit the real estate sector. And because prices are already on a decline there as we speak, while the valuation is really high relative to income, that's prone for major correction, and therefore having exposure to the financial system, not just in Hong Kong, but elsewhere. In addition, Hong Kong has an open capital account without any capital control, so money can move in and out really quickly. That also is a fuel for capital flight. So it's just to be watched here as we rally on.